watching the market now. The market is open right now, and it's been going up overnight a little bit. There's a lot of anticipation around the um, the Biden speech that's going to happen later on today. So I'm excited about that. Yesterday we was able to spot the pattern before the market closed yesterday. It was a pattern that we spotted on the 50 chart. I'm just going to put the screen here just in case you guys don't remember. This is a pattern that we spotted on the 15-minute chart where I said that if you see those, where these two circles are, these two areas are that are circled, the market goes up and it comes back and touches these two areas, that's normally where you'll begin to see it go up and be very bullish. And that's what happened last night. Let me show you real quick on the charts. I hope you guys can hear me clearly. Okay. That's what happened right here. Right here on the chart, you can see that. It's the same thing. I was trying to get you guys to see it. Those are the two marks. It came down and it touched that, and then it was bullish and it shot up. And so now we're just looking to time when the retracement will be. I mean, we're up $50. Let's see. Then we're gonna start all over. It's hard to really say with I think we're just gonna close out the positions and start all over. $71 up today. Actually, so you see I had two positions in. I had the put side, and I also had the put side, and I had the call options. I was buying and selling. And so what you see happen is that the market went up a little bit on the buy side. I didn't really have to get out of that position. I'm probably going to get right back in, just depending. But the mark that I was looking for it to hit was actually the 461. The 461. And so it did hit the 461. So yesterday we spoke about trading the patterns. Today I want to go a little into the money, the risk management part. to do that, we'll have to get to the SPY. We'll have to get to the contracts. Okay, so remember I said everything is times 100. So one SPY contract at 460 says 218. So you times that by 100, and it's basically $218 to get in. So if it moves up, if it moves in the shaded area, then it's gonna be in the money. If it moves in the shaded area, it's gonna be in the money. And this is pretty much a rough estimate of what you'll make. So if you get a SPY contract for 218, well let's go back to yesterday's transaction that I just closed out. Okay, yesterday I bought a put contract for $90. I bought the 460 yesterday for about 90 bucks. And I ended up selling it today for 218. No, I ended up selling it today. Let me actually let me find out. I can go to transactions and find that out. So let's do that. Let's find out. Okay. Here we go. So yesterday I bought one call for $91. And I bought two SPY puts for $93. You know, it could have went overnight. You know, the market is volatile because of the new variant that is out. And so what ended up happening is the call that I bought being in a worth $237 this morning, and the put was so the call that I bought was worth 90, and it ended up being 237, and the put was worth 93 and ended up being 12.97. So I ended up losing a lot of money on those two puts, but on the call, I made the 237. So that the profit was $71 off of about $200 investment. I should have bought another call. I should have did at least 2 and 2. I don't know why I didn't do that, but I should have got another call. But anyways, that part is over with. So let's move on. Okay, so pretty much what we do with this strategy is that we'll look for the pattern. For example, let's go to the market real quick, and I'm gonna write. I got my notebook here. I'm gonna begin to write down some things. I probably should have. Okay, if it does go to, let's look at something before I do that. I said I wanted to go to 461. If it does go to 461, let me see how much is on the table right now. 460 is worth 237, the same price that I bought it at. The same price I sold it at. If it goes up another dollar in the money, it'll be 291. So it'll be 291. So I can buy the call right now and just sit on it, and it might retrace down some, might end up losing the profit from it. Or, because it wouldn't make no sense for me to buy a call and a put, because, for it to go up $1, that's like, to make $50 on that, it's not worth me even having to put, so let's look at something. $4.58. Let me see how well it's holding up, because I'm thinking about getting back in the game. Thinking about getting back in the game. But this is an indication when a retracement begins to form, you'll begin to see this. That's what you'll begin to see. The same thing I put on the board right here. When you see the candlestick in the middle and the two candlesticks on the outside. And so that does give me some indication that a retracement is possibly going to form. So I don't know about getting in just yet, because I can get in, but I can end up losing the profit that was made today. As you can see, it's dropping down a little bit. So it might not be the wisest thing for me to get in right now. Let's look at this though. 455 is a support from yesterday, which is about $3 away. Let me go back. 455. Remember that 455. Let me write it down. 455 on the put. And let's look at the call. The call, 461. 461 on the call. Those are the next two support and resistances that I see. It's either going to hit 455 or it's going to hit 461. So let me look at the prices for the call and the put for 455 and 461. Okay, I said the put 455 is 100. Right now it's $122. It's 122 times 100. That's out of the money. Okay, it'll cost you $122. If it does go to if it was a drop about $5, you make about 300. So it's not, you'll make about 305. Okay, and on the other side, I said the 461 on the call. That's gonna run you $188 for that. 188 for the call. And if it was 61, if it was to go up $2, you're looking at 291. Okay, let me get you guys. Okay, so this is kind of like the math right here. Just rough estimates. It's not, it's not the actual, but it's a rough estimate of what it would be. Okay, so you spend $122 on one side to make 30. So would it make sense? This is the question. Will it make sense to buy one put right now and buy one call? I don't think it would make sense, because I think you should just either buy the call or the put, because 188, I don't have my calculator, but 291 minus 188 is what, a 111 or something like that? 117 or $93. I don't know where I'm getting this one from. It's $93, right? 122, 305 minus 122. Was that 187 or something like that? I'm a few dollars off, y'all. Forgive me, but I believe it's 187. So this the profit margin that you're looking at. If everything goes right away without considering the theta, which is another thing. So I mean, is it worth it to invest? Is it worth it to invest $310? If you invest, so basically, if you invest $310 by buying one call and buying one put, on one end, the best case, you'll make 187, and on the other end, you'll make 90. So either you're gonna make 187 on one end and lose 188, which it doesn't make sense, or you're gonna make 188 and lose 122. So you'll basically still make like 50 bucks. So it don't really make sense to buy a call and a put right now. Not at these prices. So I would either buy one or the other and wait on the market to just retrace to add to the position. See, it still says 237. Let me see. Okay, so now it's down to 457. You see a retracement is happening with the with the put. So now it's at 457. I don't know why the price didn't update yet. Let's see if I can get out and come back in. Okay, it's actually, okay, it's 185 right now. So I sold the put for $237, and right now if I was to buy it, it will cost me $185. So I actually can buy the put and just sit on it to just see if it's gonna rally back up. Right now I believe Biden's giving out a speech, and some people are still on the fences about. I actually can buy a 450. I can buy an even better contract that's closer to the money for still a little bit less than what I sold the contract for this morning. If I had a strong feeling. But anyways, we started out with about 600 bucks in the market today. We started out with about 600 bucks, and so at the same time, I'm trying to show you guys good money management skills. Trying to show you money management skills, all while explaining the strategy to you. So what I'm looking for right now on this, not the, I wouldn't say the 1 minute, but on a 3-minute chart, if it does rally up, what's going to happen when it gets to, if it wasn't, right now it's dropping a little bit, right? But what I would want to know was, if it does rally up, what would happen when it gets to 458? Is it going to break through 458? Or is it going to begin to form an M? Or is it going to just continue to just go all the way down to 455? That would have been a good opportunity to, actually, I should have just left the puts in. I don't even know why I took the puts out that quick. I could have made my money back on the puts. The money that was lost. So I did move fast on that. But let's see what happens. I'm really just looking for a setup, because with this strategy, it's not like you're just buying a stock and you're sitting on it. Time is money. So every minute that goes by, with your strategy, without it being a, sh- a strong move in the market, you're going to be losing money. So that's why your timing does have to be good because of the theta. The reason that I like using this pattern strategy that I have with options is because it's the only market that will reward you for your timing being right. And it's really not so much about me predicting what the market is going to do, but it's more so of timing the right time to place the trades. So see, you see it's going up right now a little bit. So we can have it. It didn't hit support. So if it's not hitting support, it can honestly it can just be choppy all up in here. The support and the resistance are the key areas of what I look for when I'm buying and selling. But if it hasn't hit support or resistance, and for you to get in, I mean, you could be getting in a little bit early. The resistance that I'm looking at is 455. No, I'm sorry, the support that I'm looking at is 455, and the resistance that I'm looking at is 458. And so I'm just looking for a setup, just trying to get a quick setup, and we're looking at the 3 minute chart right now because that's where the patterns that I was showing you yesterday. Whenever you see these marks right here, there's going to be a reaction in the market. There's going to be reaction. So, um, um, and this is a chart that I see those, this pattern figure at. So that's why I'm focused on the 3 minute chart right now. That's how we doing it. That's how we kicking it, y'all. I'm looking for a good setup. Yesterday I showed you guys on the board. I showed you how to look at how to spot a rally. I showed you that yesterday before the market closed at 4 o'clock. And just as I said, I mean, the exact same pattern that I got drew on this board is the same pattern that formed on the charts before the market went up. And so now I'm about to show you on the charts, what does it look like when the market is about to drop? And if we see that same pattern on the charts again, then we're gonna know it's time to get in with some put contracts. And it's basically just the opposite. I showed you guys what the rally looks like, and now I'm about to go over what a bearish market is gonna look like. I don't know, maybe I got the candlesticks back opposite, so forgive me if I do. Um, Let me see how I do this. Let me see if I can fit it over here. Okay, so those are the two marks that I want you to pay attention to. And so when you'll see when there's going to be I actually have to delete this. I gotta erase this in order to have some more space here. I'm erasing the rally, and I'm going to draw out what does it look like when you are um, when there's going to be when it's going to be bearish for a little while. Okay, so those are the two marks there. So what happens is, like we see form right here, like we see on the 3 minute chart, we see it go up there. And so what would happen? I'm going to show you what has to take place in order for us to time a good entry point of selling. Okay, so okay, it's already forming something right now. You see, it's like halfway. If it was going to be an M, it'll be halfway. So that's where it starts, right? Well, let me just show you. Okay, so let's just show the market going up a little bit. Okay, this is the market going up a little bit, right? It goes up and then it comes back down and then it comes up to the same place where it was before. These are the key areas that I want you to pay attention to. Now, when it gets here, if it can't break through here, what you'll see happen is it's gonna knock back down. It's gonna knock back down. And it's going to, it's the exact same thing from yesterday. It knocks back down and it comes and touches, it touches that same point that it was at. So the market goes up, it forms a little pattern, it comes down, goes back up, forms an identical pattern, and then it drops again. It doesn't drop, it's not gonna drop right away. It's gonna come up to try to touch the identical pattern on the third time. If it can't get it, then you're gonna just see you're gonna see a great fall. You're gonna see a great fall. But normally, sometimes it happens on the second time. Very, sometimes it happens on the second pattern, on the second figure, sometimes on the third. But I would get in when the second part forms, which would be up here, when the identical blocks or whatever you want to call it, I don't know, these identical candlesticks, when that forms on the other side. See, right now we see one at the bottom. And so the reason I don't really think it's a good time to get in right now is because you could just waste a lot of money on the theta, and that is the contract expiring. And so that's why I don't know if it'll be a good idea for you to get in just now. So we'll just see how it goes. All right, guys, I believe this is a good video to start us today. I'm gonna be back on here shortly, but in the meantime, keep an eye on the charts, and you all have a wonderful day. God bless you.